And joining us tonight, a familiar face, Roger Montgomery from rogermontgomery.com. We are hanging out to find out what your pick is for 2011, as I know that some of our viewers are as well.
I did something a little bit different to many of your other guests. As you know, I wrote a book called Value.able, and it sold out in 14 weeks. And then I set up a blog so that people could actually talk about the stocks and talk about the way they're valuing companies and all that sort of thing. And so what I call them the Value.able Graduates. You know, so they're the guys who really know the stuff in the book. And I started about a week ago, and I sent out a message that just said, look, apply the Value.able techniques and tell me, what do you think? And I asked the whole community. So we put together this enormous spreadsheet with all these stocks listed with the names of the people. It's up on the blog at the moment. But the one company that for me really stands out as having the best short, medium and long-term potential is Matrix Composite and Engineering, and its code is MCE. Now, I've been mentioning it here on Sky Business for months and months and months, so I think when I first mentioned it, it had already gone up a lot, and people probably were a bit hesitant to buy it. It's since doubled from the first time I mentioned it on the show, and I still think it has more to go because it's at a discount to its intrinsic value. And so despite many people look at charts, I guess, and they want to know where the shares have been. So you look at a chart and immediately you go and say, well, it's too expensive.
Well, let's bring the chart up, because I was going to say it began the year at $2.05. It ended November at $5.38. So a lot of people.
Well, and now today it's over $6. And look, my value for it is closer to 7. So it still has. I don't know whether, of course, the share price is going to go straight there or whether it'll halve before it gets there. But its long-term prospects are very, very good. Now, there are some other companies that were mentioned as well, and I found it really tough today to decide.
So just let's pause for a second. You were taking into consideration what your bloggers and people in the community were putting in.
Well, they're pretty good. You know, the book does a good job of teaching people how to look for good quality businesses, and it also does a good job of teaching people how to value companies. There's all sorts of ways of valuing companies, but the method that I talk about in the book is something that goes all the way back to the 1950s, and it works really, really well, and it solves some mathematical conundrums. Some people would say it's far too elegant and it's too perfect, and that therefore it can't be right. But I actually like it. It works really well, and it's been working for all the stocks we've picked on Sky Business this year.
Okay, let's get back to Matrix CE, because I know people will want to know about the company. What does it actually do?
Okay, so when an oil company decides that it's economically viable to look for oil in the deep, deep ocean, they build what are called deep sea oil rigs, and in the production of those rigs, and also in the renovation, if you like, or the upgrade of those rigs, there are risers which connect. They're pipes. They connect the rig to the seabed, and they need buoyancy devices. Otherwise, they just all collapse on a heap and fall to the bottom of the ocean, I suspect. So these buoyancy devices is what Matrix Composite and Engineering produces. Now, it does that with 3 other major competitors globally. It sells its products to 30 different countries around the world. It also has some IP or some intellectual property in that process. And so it does some things in a way that nobody else does, and so it has some really high-end, top-name customers that seek out its products. Now, what's interesting about this particular company is a broker earlier this year put a sell recommendation on the stock when the share price was significantly lower, and it said that the order book was drying up. My take on that was the company was building an enormous production facility in Henderson, and in fact, if you go to the Australian Export Award sites, there's talk about that particular facility, and it's going to be one of the biggest, if not the biggest, production facility in the world. Why is that exciting? Well, what it tells you is that I reckon Matrix Composite and Engineering was getting more orders than it could cope with, and there was more demand for its product than what it could produce. And so, of course, it has to say to the customers, look, we can't do that for you. We're at full capacity. We can't produce these buoyancy devices for you. Let's go out and build a bigger facility and come back to us when the facility is ready. But for the time being, you have to go somewhere else. So this analyst has seen the order book dropping off, but not realising that that's precisely, it's pushed customers away. It's proof that it needed this additional facility because it's got a lot of orders coming through. Barriers to entry, very, very high. Why? Well, it's expensive. There's a process involved, and there's testing involved. A certain number of these things have to be tested, and that's expensive to do. So the barriers to entry are quite high, and I like that. And that's why there's really only 3-4 companies in the world doing it. And this is one of the better ones. Now, it only listed this time last year.
Well, I was going to say, how come we have not heard? I've never heard, I'll be honest, of this company, Matrix C&E.
Sure.
Where's it been hiding?
Well, it's been around since 1982. It's been around a long time, and so it's actually developed its intellectual property over that time. And it listed in November or December last year, about a year ago, listed at $1, far too cheap. Compared to its intrinsic value, and it's continued to go up in price, and that's going to, I think that intrinsic value is probably going to stabilise for the next couple of years. So I think once it hits that $7 to $7.50 level, if it goes a lot higher than that, I'd be a little bit reluctant to hang on to it. But it's still at a substantial discount. It's got a great return on equity. It's got little or no debt. Its cash flow was fantastic considering the amount of money it was spending in developing this new facility. And the biggest driver of deep sea oil exploration is the oil price. And I've got some stuff that I've written down about what I think is going to happen to the oil price.
Because that's sort of the fundamental basis of it all.
And I've talked to people on this network before about how I invest in commodities, and I tend to own the futures rather than companies, and that's because I think there's a risk that the board does something wrong. If you and I owned a wheat farm and it had just been flooded, well, it really doesn't matter what happens to the wheat price. We haven't got any wheat. And you run the risk when you own a farm or if you own a company that that's going to happen. So if I believe that the wheat price is going to go up, I'm going to own wheat. So I own things like rubber, and I own oil, and I recently sold US 10-year T-notes. But I think, or the oil price, I think we're sleepwalking into an oil crisis, and it's not being widely reported at the moment because by definition we're sleepwalking and we're not aware that this is developing at the moment. So let me give you some statistics. There's a book just been released called When Oil Peaked. So post tense.
Post-peak oil.
Yeah, and it's talking about it having already peaked.
Yeah.
It was written by a guy named DeFries, who was the understudy to Hubbert, and Hubbert was the peak oil theorist. And he said that US oil production would peak in 1970, on or about 1970, and he got that pretty much right. DeFries said that it would peak in 2005 in his first book. In his second book, he said it would peak in autumn of 2005, the Northern Hemisphere autumn, and it looks like he was right because the EIA, which is the Energy Industry Association in the United States, they've come out recently and said global oil production peaked in 2005. The IEA, which is the International Energy Agency, said oil production peaked in 2006. And Platts Oilgram, which is the sort of widely read industry newsletter, if you like, or journal, it said that oil peaked in 2006.
So you would rather gain exposure to that market through this company than oil futures?
Well, this is a business. Well, no, I own oil futures as well, but this is a company that's going to benefit because as the oil price goes up, and I've got a lot more that we could talk about here on oil, as the oil price actually rises, it becomes more economically viable to explore deep sea. And if there are more rigs being produced, then they need more buoyancy riser buoyancy devices. Matrix is positioned to actually take advantage of that. It's got the biggest facility in the world to actually produce the stuff. So it looks pretty good.
All these pieces of the puzzle are falling in place.
I don't know what the share price is going to do. I can't forecast the share price. What I can tell you is that it's an A1 business. On my blog, I list all the A1 companies. In my book, I talk about the things to look for an A1 business. It is an A1 business, and I rank companies from A1 down to C5. It's the top of the pops. It's a great quality business, high rates of return on equity, and the other thing that you want is a discount to intrinsic value. It's still at a discount to intrinsic value.